I want you to stop me from doing this, but I feel that it's just necessary. The markets this morning are spooked. I know, it's just horrible. I just don't know if you could have stopped me. Maybe it would have been better. Okay, but we do have tons and tons of news this morning, so let me get started. We knew that this is going to be a wild and crazy week, and we are not being disappointed, whether it's Halloweenish or whether it's just normal stuff. But what we have right now is lots and lots of Mag 7 results. The three reports that we've gotten so far have all been beats, but the street wasn't happy with parts of the guidance and parts of what companies were doing. And so the markets are down, and they were already down, but then they got the PCE report comes in, and the PCE is the core was too hot. I mean, the headline number is fine, but we know oil is down. Everybody can see that. But the markets are down. They didn't like the PCE report either. Bond yields are way up, suggesting, as I've been reporting all this week and last week, that maybe the Fed is not going to cut after all, or maybe it shouldn't cut after all. And then, later today, we still have Apple and Amazon to go. And tomorrow we have the big jobs report. We have, the regular Thursday jobs report today, which came in fine. But the big super jobs report tomorrow, who knows what that's going to say, especially with regard to the corrections. Anyway, exciting times. Well, Tesla was hanging in there early. It was flat to up actually for a minute, but now it's joined the party and it's down too. But on the fundamentals, I don't know. The news this morning has been excellent. Starting with this, Tesla, the AI department. So you can find that at Tesla_AI on X. They've started to become like super transparent, and this is fantastic. So they say as October comes to a close, here's an update on the releases. What we completed the end-to-end on highway that shipped so far to 50,000 customers with 12.5.6.1. Then the Cybertruck build that improves responsiveness, that went out successfully. The We Robot event, of course, we know about that. Now, what's coming next? First of all, a full rollout of end-to-end highway driving to all AI4 users, targeted for early next week, including enhancements in stop smoothness, less annoying bad weather notifications, and other safety improvements. So end-to-end highway for virtually everybody. Improved 12.5.x models for AI3. This AI thing is really driving me nuts. They got to make the I lowercase because otherwise it's too many fonts. Anyway, you know what I'm talking about. All right. So then actually Smart Summon, ASS, released to Europe, China, and other regions of the world is coming. Actually, then version 13 is a package of following major technology upgrades. Yours is coming in version 13. 36 hertz, full resolution, AI4 video inputs, native AI4 inputs and neural network architectures, 3 times model size scaling, 3 times model content length scaling. Actually, some of these things I have no idea what they're talking about, but I'm sure we'll hear later today, and I'll report on it as soon as I know. Maybe tonight we can get that from Bradford. Much improved reward predictions for collision avoidance following traffic controls and navigation. That I can understand. I'm sure you can too. Efficient representations of maps and navigation inputs. I assume that means faster. Audio inputs for better handling of emergency vehicles. That's fantastic. Redesigned controller for smoother, more accurate tracking. Okay. Integrated unpark, reverse, and park capabilities. Support for destination options, including pulling over, parking in a spot, driveway, or garage. There you go. Improved camera cleaning and handling of camera occlusions. It says we have integrated several of these improvements and are already seeing a 4 times increase in miles between necessary interventions compared to version 12.5.4. This lays the foundation for the version 13 series, and we are targeting to ship version 13 to internal customers by the end of the week. Most of the remaining items are independently validated and will be integrated over November in a series of point releases. We are targeting a wide release of version 13.3, which must already be out there, with most of the above improvements for AI for vehicles around Thanksgiving. And I got to tell you something. I love this transparency. Now, to a certain extent, maybe they're just a little behind what we were all hoping for, and especially don't like the fact they didn't give us any idea of when AI 3 will be out on 13.3, but and of course Cybertruck, but very, very good news, very thorough, very transparent. I love it. This from Benzinga this morning. Zoox, of course, is introducing their new little robocar, and it will be coming out in a couple of cities in the next couple of weeks. And their co-founder, Jesse Levinson, on Wednesday dismissed the possibility of Tesla Inc. deploying autonomous vehicles without safety drivers in California next year, alleging that the EV giant lacks a technology that works. Well, he says that the article says Tesla is faced with a lot of regulatory hurdles that they haven't even started trying to climb yet, according to Levinson. But the fundamental problem, he said, is that the Tesla doesn't have the technology that's working. By works, I want to differentiate between a driver assistance system that drives most of the time, except when it doesn't. And then you have to take over versus a system that's so reliable and robust that you don't need a person in it, Levinson said. Levinson said that he drives a Tesla and uses its full self-driving driver assistance system every couple of weeks. And while the system is impressive, it is also a bit stressful. Usually it does the right thing, and then it sort of lulls you into this false sense of complacency, and then it does this wrong thing. Then you're like, oh my God, they're about 100 times less safe than a human. Well, if they're 100 times less safe than a human, and we're getting another 1,000 times better over the next 4 quarters, well, then I guess it will be way, way better than a human. Levinson said all of this while also pinning it down to the company's use of just cameras. You really do need significantly more hardware than Tesla is putting on the vehicles to build a robotaxi that's going to work. Okay. So Musk responded. He says he said he's optimistic that FSD technology can ensure full vehicle autonomy with future versions of the software, and hit back at Levinson on Wednesday. He says if he hadn't gotten bailed out by Amazon, his company would be dead already. I'm not sure how that's even applicable to the situation. Who cares how they got bailed out? During Tesla's third quarter earnings call earlier this month, Musk said that the company expects to start ride-hailing in Texas and California starting next year, subject to regulatory approval. Okay, so that is that back and forth. We had an Edmunds review yesterday. They gave it, they don't give many 10s, but this is the reviewing the Model 3 performance, and they said on acceleration, give it a 10. Tesla claims a 2.9 second 0 to 60 time with rollout. They were only able to do 3.0. But they still gave it a 10. On braking, they gave it an 8. But the kind of braking that they're talking about is only a track issue. On steering, they liked it. They thought it was an 8.5, and handling, they gave it 8.5. Drivability, they gave it a 9.5. They said day-to-day drivability is excellent and nearly on par with the Model 3 long range, which is a serious compliment. So the Model 3 long range, I don't know what they gave that, but it must have been close to a 10. So seat comfort, they said the seats are a step up from the previous model across both rows. For one, they came standard with perforation and ventilation. And then they said the seats could benefit from being a little more aggressive on the bolsters because you still slide around a bit when cornering. On ride comfort, they give it an 8. On climate control, 7.5. On ease of use, 7.5. He isn't thrilled with the fact that there are no buttons. He doesn't like that everything is in the control center. He says on the music, he gives that what did he give it? You know what? I didn't mark down the number on that one, but anyway, said you'll love cranking your favorite music in the Model 3, especially with the premium 17-speaker system. He says it offers immersive listening experience that reveals new dimensions in familiar tracks. Anyway, goes on and on. I think this is too long to do right now. He ends up giving an overall rating of 8.4. The Model 3 performance is incredibly quick, but we're just as impressed with what else it offers. There's more than 300 miles of Edmunds test range, a quiet cabin, nimble handling, that doesn't come with at the expense of ride comfort, a nice blend then. The performance still suffers from some quirks that all Model 3s have, but overall it's a heck of a deal. Well, there you go. This from AJ this morning. Stellantis revenue decline is crazy. A 27% decrease compared to the third quarter last year and a 24% decrease compared to last quarter. What's happening to Stellantis? This is Randy Kirk. Please hit like, subscribe, and notify. Of course, later today, Cern is back. Yes, we got Cern coming back today. I think he's got a lot of content, so we'll probably have him 2 days. And yeah, that's exciting. And then as mentioned, we've got, of course, Bradford, Ferguson tonight. All right. Meta lost another $4 in I'm sorry, they lost more than $4. Meta lost another $4 billion in their reality labs. They missed on user growth, and some seem to be worried about the amount of money they're spending on AI. I think it's like, I should have wrote down the number, but huge amounts on AI. He's got to keep up with Elon. I mean, basically, that's it. As I've reported on this channel, Elon is not only spending the money, but his capability of bringing the AI clusters up rapidly is basically unstoppable. Grok announced, and then Grok announced new image tools today. No details on that. Maybe I'll go into that tomorrow or the next day. But Grok is getting very, very exciting in terms of their capabilities. And then they missed also on revenue guidance. So that's one of the reasons why the market's down today. From the 𝐄𝐦𝐚𝐲 letter, U.S. layoffs jumped by 160,000 in September to 1.83 million, the second highest in 4 years. Monthly layoffs have increased by 540,000 or 42% over the last 3 years as the labor market has slowed. As a result, the layoff rate, measured by the number of layoffs as a percent of total employment, rose to 1.2. It's the highest since 2020. Meanwhile, private sector layoffs spiked to 1.78 million. This is the highest in 4 years. So this is we're going to be talking about labor a lot the next couple of days, and we want to put it in context. This is from CNBC this morning. Inflation increased slightly in September and moved closer to the Federal Reserve's target, according to a Commerce Department report Thursday. The Personal Consumption Expenditures Price Index showed a seasonally adjusted 0.2% increase for the month, with a 12-month inflation rate at 2.1. That is both in line with the Dow Jones estimate and is also what the Fed wants to see. However, they're more interested in the core than they are in the headline number. And the headline number, of course, includes food and energy. And we know that energy is down. I'm not so sure about food. Anyway, Fed officials, of course, are targeting 2%. And that is certainly close on the headline. So it goes on to say that though the headline number hit, the inflation rate on the core was 2.7%, and that was on an increased 0.3 on a monthly basis. So that is a miss. The annual rate was 0.1% higher than forecast, but the same as in August. So 0.3, 2 months in a row. That move in inflation was tilted towards services prices. We've seen this over and over again. And the rate I've been talking about the wage increases in services. It's how they're going to get it down. If the wages are the biggest part of what services are. While goods prices decreased again by 0.1%, the fourth outright deflation figure in the past 5 months in that category. Because why? Because manufacturing is being killed. Housing prices eased off their pace, only going up 0.3%. Energy, and by the way, maybe that's something else I need to go into in detail. I think we're actually going to see some very flat prices on housing this off-season. We're now in the off-season for housing from now until February, March. And I think it's going to be flat in terms of price increases. Energy, goods, and services fell 2%. See, and that's what I'm talking about. Energy, goods, and services is down, okay? And you got the manufactured products. You have goods down, so deflating, but the services are so high that it's bringing the whole thing up. This report comes with markets betting heavily that the Fed will cut on next week. In September, the Fed slashed by 0.5 point. Policymakers have expressed confidence that inflation is heading back to a target, but at the same time showing concern over the state of labor market, despite most indicators showing that hiring is continuing and layoffs are low. We just showed that layoffs are now back to big numbers. A separate report Thursday morning reinforced the notion that companies are mostly hanging on to workers. This is the initial unemployment benefits number, came in at 216,000. That's a decrease of 12,000 from the previous upwardly revised level. The total was also below the 230,000 forecast. So, but it's right in the same range that we've had all year. Now, that's good. I mean, that is the best report, I think, that is maybe the most accurate of numbers that we're getting, and that's showing that the layoffs are definitely staying in this range, which is not bad. Despite worries over inflation, the Commerce Department report showed income and spending held up. Personal income increased 0.3%. Slightly higher than the August number and in line with expectations. Consumer spending rose 0.5%. That is a 6% per year rate, topping the outlook by 0.1%, but that would still be crazy. And the personal savings rate moved down to 4.6, but that's still high. But it is the lowest of the year after all of the adjustments that were made, massive adjustments, if you'll remember. In yet another data point Thursday, the Bureau of Labor Statistics reported that employment cost index increased 0.8%. The employment cost index increased 0.8% in the third quarter, 0.1% below the forecast. On a 12-month basis, the index, which measures wages, salaries, and benefits, increased 3.9%. compared to an increase of only 2.4% in the consumer price index. So this 3.9, that's great if our employees are finally, because all during the first 3.5 years of the Biden administration, real wages were down. But what we're seeing now in these last few months, if we can believe the numbers, and we might be able to, I'm not sure. Anyway, if the numbers are right, finally, employees are seeing their real wages increase, as we're seeing some, radical decrease in the inflation rate, which is good. So all those things point to a lot of good. But remember, we've got these two economies, and we've also got some unhappiness with the folks on the street are not happy right now. But let's take a look. We have got Tesla now down $2.31. It was down like $4, maybe and a little more a minute ago. So it's popping back up again. Again, it started out positive in the green, but then went way negative and now is coming back. On the other hand, the indices are all down and staying down and going down more. So the Dow is down 270 and continuing down. The NASDAQ is down 368 and definitely continuing down. S&P is 70. When I say definitely, I mean the trend line is down. Who knows what it will do by the end of the day? I'm just saying the trend line is down. And then the S&P is down 74. Again, the trend line is solidly down. The Magnificent Seven now all down, with NVIDIA, for instance, down 553, Meta down 15, Microsoft down 24. So big down on all of the Magnificent Seven, even as I mentioned, though, with Tesla doing slightly better than the rest, or most of the rest. That would be more accurate. The Cathie Woods are all down. And again, this is very predictable because why? Yeah, the bonds. Okay, we'll take a look at those in a minute. The percentages are Dow down 0.72, NASDAQ down 2%, NASDAQ down 2%, S&P down 1.35, and so you would expect Tesla to be down 4% when the NASDAQ's down 2%, but no, Tesla's only down 1%. So again, doing much better than the market this morning overall. But like, for instance, that would, you've got Amazon down almost 3%, Meta down almost 3%, and Microsoft down 5.7%, NVIDIA down 4%. All right. So there you go. Tesla, compared to the rest, is doing very well this morning. All right, let's go over to those bonds because that is where the action really is. This is what everybody's paying attention to. And it's very, very indicative of whether or not the Fed is going to cut next week or not. So you got the 10-year is up 6.3 basis points this morning at 4.327. This is very close to the highest I've seen it. It was at 4.33 the other day, but 4.317, that's very, very close to 4.33. You've got the 2-year up 4.5% this morning. You've got the 3-month actually down this morning. Okay, that's going in the right direction in terms of removing that inversion. And the 2-month also down a tad, both of them close to break even. So 0.3%, I'm sorry, 0.3, yeah, 0.3 basis points. And the 2-month 0.6 basis points down this morning. All right, let's go ahead and look at the oil. There you've got, goodness gracious, so much red. You've got oil actually up this morning, getting close to 70 again at 69.56, up 95 cents. Brent up similarly and sitting at 73.35. And natural gas down 3% this morning to 2.757, but that is still way up there, super high for natural gas. Gold finally being trimmed after getting above 2,800 is now off $35 this morning at 27.65. Silver also taking a trim, down 3%, sitting at 33. And copper, though, is actually up a bit this morning, 0.36 at 4.367. The dollar down 0.5 against the yen, but up 0.175 against the euro. And the Bitcoin at 71,000, down 885. And there you have all of the reporting that we do for you every single day. Let's go back again and see if there's any change in how things are going. So yeah, Tesla's still sitting there around down $2, $2.46 at this exact minute. All right, there you have it. Later this morning, as mentioned, you've got CERN Basher is back, yay. And then we've got Bradford Ferguson on tonight. Yesterday, I had a special report because it turns out that Scott Walter was in Helsinki. So we had a special with Brian Wong yesterday. You want to go back and take a look at that. I'll put the card up right here. Okay, that's all I got for you right now. And hopefully the markets can find some grounding. We got Apple coming out today with their reporting and Amazon. So it'll be interesting to see how that impacts the markets. And then tomorrow, jobs. What a week. It's been great talking to you.